There's a strange pattern showing up across the US economy right now. On the surface, things don't look broken. Companies are still operating, earnings are still coming in, and consumers are still spending. But behind the scenes, something very different is happening. Businesses are hitting pause, not shutting down, not collapsing, just pausing. Expansion plans are being delayed, hiring decisions are being reconsidered, investments are being reviewed more carefully, and perhaps most importantly, companies are choosing to wait even when they technically could move forward. So the question is, why? What exactly are businesses seeing that's making them slow down at a time when things don't look obviously bad? The answer isn't one single problem. It's a combination of signals, small shifts that, when put together, create a very different picture of the economy than what you see in headlines. One of the biggest things businesses are noticing right now is how unpredictable demand has become. Customers haven't disappeared, but they're behaving differently. Spending is becoming more selective. People are still buying, but they're thinking harder about what they buy, when they buy, and how much they're willing to pay. In some categories, demand is holding up. In others, it's quietly weakening. And the problem for businesses is that this behavior is inconsistent. It's not a clear downturn where everything drops at once. It's uneven. One month looks strong, the next looks softer. One region performs well, another slows down. One product line grows, another stalls. That kind of unpredictability makes it very difficult to plan. And when planning becomes harder, companies naturally become more cautious. Another thing businesses are seeing is pressure on costs that hasn't fully gone away. Even though inflation headlines may suggest things are stabilizing, many companies are still dealing with elevated costs. Labor is more expensive. Borrowing is more expensive. Energy and logistics costs remain unpredictable. That creates a squeeze, because if costs stay high while demand becomes uncertain, margins become harder to protect. So companies respond by tightening control. They review budgets more carefully. They delay non-essential spending. They avoid making long-term commitments unless they feel confident about the return. And that leads directly to this pause behavior. There's also a growing sense of uncertainty about what comes next. Businesses don't just operate based on what's happening today. They make decisions based on what they expect to happen in the future. And right now, that future feels less clear than usual. There are questions around interest rates, around consumer strength, around global stability, around policy decisions. None of these are necessarily immediate crises, but together they create a sense that the environment could shift quickly. And when the future is unclear, moving aggressively becomes risky. So companies slow down, they wait for more clarity, they gather more data, they give themselves more time before making big decisions. It's not about fear, it's about managing uncertainty. Another key signal businesses are paying attention to is how long current trends can actually last. For example, some companies have been able to maintain strong performance by raising prices, but there's a growing question: how much longer can that continue? At some point, customers push back. At some point, higher prices start to affect demand, and businesses know that. So even if things look stable now, they're thinking ahead. They're asking, what happens if this stops working? And that kind of thinking naturally leads to more caution. You can also see this pause in hiring. Many companies aren't laying off workers aggressively, but they're also not hiring at the same pace as before. They're keeping teams lean. They're filling only critical roles. They're avoiding overcommitting. Because hiring is one of the hardest decisions to reverse. And in an uncertain environment, flexibility becomes extremely valuable. The same pattern shows up in investment. Projects that would have moved forward quickly in the past are now being reevaluated. Companies are asking tougher questions. They're demanding clearer returns. They're prioritizing investments that improve efficiency rather than those that simply drive expansion. This is a shift from growth-first thinking to discipline-first thinking, and it's happening quietly across industries. What's interesting is that this pause doesn't mean businesses are pessimistic. In many cases, they're still optimistic about the long term. They still see opportunities, they still believe in growth, but they're being more selective about when and how they pursue it. They're choosing their moments more carefully. Because in today's environment, timing matters more than ever. Move too early and you take on unnecessary risk. Move too late and you might miss an opportunity. So the safest approach for many companies is to wait until they have more confidence. And that's exactly what we're seeing, a collective pause. Not because businesses can't move, but because they're choosing not to, at least for now. There's also a psychological layer to this. After several years of rapid changes from supply chain disruptions to inflation to shifting consumer behavior, companies have become more aware of how quickly conditions can change. That experience has made them more cautious. They've seen how fast things can turn, and they're adjusting their strategies accordingly. Instead of assuming stability, they're preparing for variability. Instead of committing fully, they're keeping options open. And that mindset reinforces the pause. But here's the key point. A pause doesn't mean nothing is happening. In fact, a lot is happening beneath the surface. Companies are analyzing, they're optimizing, they're restructuring,